If I had to start from zero today, no capital, no track record, this is exactly how I would scale to $10,000 per month fast, no fluff. The first thing I would put my energy into is developing a mechanical trading strategy. I'd pick one trading strategy and master it. I'd break it down into a mechanical system so I knew exactly what my entry points were and what my exit points were. Meaning, what do I need to see in the market? What do I need the market to present to me for me to know that I'm taking an entry? For example, you may start on the daily chart and you may want to see a rejection at the top or the bottom of a structure, a double top or a double bottom, and then you go down to the lower time frame and there are very specific criteria that need to be met for you to place an entry. So the first priority, if I started again from zero, would be determining what specifically my entries and my exits would look like. And I would put those into a mechanical system. If I couldn't put it into a mechanical system, well then I would be questioning whether this strategy is actually profitable. Because if I can't put it into a mechanical system, then how can I test it to know if the system is actually profitable? So step number one, finding one strategy, a simple strategy. It could be a strategy that you execute on the 1 hourly. It could be a strategy that requires multi-time frame analysis, where you look for a daily direction on the higher time frame and then drill down to lower time frames to determine the entry. Whatever the system is, I would make sure I have one system that's simple and that is highly mechanical. And that way I can go off and do my second priority, which is now testing that system. And to get started, I want to be finding and doing at least 100 trades worth of testing. That means I'm going on to my charts and back testing historic data to get at least 100 trades of accurate testing over maybe it's a 12-month period of data that you're testing to have at least 100 trades. And that's important for two reasons. The first reason it's important is because it gives you a general idea of what your average strike rate's gonna be and what your average risk to reward's gonna be. That becomes really important because then we're gonna figure out, all right, if I wanna get to $100 or $10,000 per month in trading profits, then I need to know what my average returns are gonna be per month, so then I can get an idea of how much capital I need to have under my belt to make $10,000 per month. Without those general figures, you don't really know, you're kind of shooting in the dark in terms of how much capital you need to have to be able to hit your actual determined monthly desired income. So the first reason I'd be gathering 100 trades is for those average numbers. So I have a good idea of how much capital I need to be hitting $10,000 per month. The second reason is because it's going to help me develop a risk management protocol that will keep me in the game long enough to make money. So once you know your average strike rate and you take all your wins and you figure out what's your average risk to reward on each win, you can then talk to ChatGPT and ask ChatGPT to create how much you should risk per trade if you want to be able to take 100 trades without hitting a max drawdown of 10% for your specific figures, your average strike rate and your average risk to reward, and you don't want to be taking more than 2 losses per day. So you can feed ChatGPT this data to get it to create a custom risk management protocol for you to ensure that you can take 100 trades without ever worrying about hitting max drawdown of 10%. And what I'm going to do is I'm going to link a video of where I elaborate on this specific risk management protocol in this video so each of you can have that. But step one is develop one strategy, make it fully mechanical. Step two is get at least 100 trades worth of data to test that, to ensure that, well, firstly, you know it's actually profitable, and then secondly, have the data to be able to create that custom risk management protocol, and also have the data to ensure you can now go off and figure out how much capital you need to have to be ensuring you're hitting $10,000 per month. Now, the third step after this is I would be going off and picking 3 prop firms. If I was starting from zero, I would only use prop firms. To develop your own capital, a big enough capital base to be making $10,000 per month, I wouldn't worry about using my own capital by that point. I'd be focusing on using other people's money, and the best way to do that nowadays is through prop firms. So I'd be choosing 3 prop firms that have reasonable rules, that allow me to trade my strategy, that allow me to trade my markets, that have a drawdown buffer of around 10%. It's pretty reasonable. Anywhere from 6 to 10% is good. You can do your research on ChatGPT. You can have a look into my personal prop firm, Telos Capital. There are plenty of great options out there that allow you to trade their capital with very little money down and absolutely no risk. And I would be picking 3 prop firms. The reason I'm picking 3 prop firms is because you don't want to rely on any one prop firm. You want to have a basket of prop firms so your capital base is never at risk if one of the prop firms goes under. And then I would be focusing, and this would be my top priority now, on sticking to my mechanical trading plan while on those prop firm challenges. And my focus would be passing one prop firm challenge, then going on to the next, and then passing another, and then going on to the next, and then passing another and going on to the next. And it's as simple as that. I just want to build up my prop firm accounts as much as I can. Now, priority number 4 to ensure that I am sticking to my trading plan has everything to do with psychology. And now I'm putting all my focus in to hone in my psychology. This little boy loves my car. Hey, buddy. I'll rev it for him. So there are 3 things I'm paying attention to when it comes to psychology. Firstly, I'm paying attention to my pre-trade routine. I developed this tool called the Bulletproof Your Trading Mindset tool after working with thousands of traders and figuring out what the mindset is of the traders that actually make money. And I put it into this tool because I realized that the best traders were doing something with their psychology before they took a trade. They were taking trades that aligned with their process and with their plan. They weren't taking trades based on what they thought was going to happen in the market. They were trading based on what they were seeing, not based on what they were thinking is going to happen in the market. And it seems like a simple thing to do, but it's actually very difficult to do. The mind is riddled by so many biases, in particular confirmation bias. And confirmation bias makes you see things and trade things that aren't actually there. So I developed the Bulletproof Your Trading Mindset tool. It's completely free. I link it in every single one of my YouTube videos to ensure that you have a tool that you can rely on to ensure that you're always making trading decisions that now align with your proven process. So I would be using that before every single trade I take. Then, secondly, after every single trade I take, if I was in a state of elation because I just took a win, I would be humbling myself. I would be reminding myself of the drawbacks and the shortfalls and the disservices of taking wins. I would be reminding myself that every time I win, I puff myself up and I force trades on the market. I would be reminding myself of the disservices of winning so that I can humble myself, so that I can come to the next trade grounded. And so that I don't come to the next trade thinking that I'm the best trader in the world and forcing ideas in the market. Because if you don't learn to humble yourself as a trader, you're going to get humbled by the market. If I took a loss in the previous trade, I would be lifting myself. I would be reminding myself of the benefits of that, the importance of taking losses every so often so that it reminds me of the real risks in the market and the priority and the importance of sticking to my trading plan. I would be reminding myself of some of the things I've done really well so that I can lift myself out of a state of fear so that when I come back to the market the next trading day, I'm not in a state of fear, fearing another loss, therefore not taking opportunities the market presents to me. So the important part here with your psychology is that you're putting yourself in a good state before you trade, and you're putting yourself in a balanced state after you trade so that you can go back to your processes and your trading plan. The third important part when it comes to your psychology, if I was to start all over again, is I'd be doing everything to raise my level of self-worth as a trader. This means not becoming infatuated with this $10,000 profit per month. Because I guarantee you the traders that make $10,000 per month aren't the traders who are desperate to make $10,000 per month. They're kind of the traders that sit back, don't really need it, they're nonchalant about it, and they just pull profits from the market because what they're doing is they're just sticking to their processes. They're not enamored with this idea of making $10,000 per month. And they're also not fearful of taking losses in the market. So what I would be focusing on is raising my self-worth and self-identity so I'm not desperate to have to make $10,000 per month. It's kind of that analogy when you try and grip a toad too quickly and too tightly, it slips out of your hands. And the more tightly you try and grip it, the more it slips out of your hands. It's no different with wanting to make $10,000 per month. The traders who make $10,000 per month aren't necessarily the individuals who need $10,000 per month. So you need to ground your infatuation with pulling these types of profits from the market. You need to have a stable life and a stable income coming into the markets, whether through a business or through full-time employment. And this is typically the state where you start to make the most money as a trader, because you're relaxed. You're not forcing anything in the market. You're not fearful, you're not greedy. And when the market presents opportunities that align with your plan, you just execute and you effortlessly scale up. Now traders, just through December this month, I'm giving access to my much in demand trading psychology archetype quiz. This is a 13-question questionnaire and assessment of your trading psychology. And by the end of finishing that, you're gonna know exactly what trading psychology you have. And I give you a custom report that I've developed to help you improve your trading psychology so that you can start pulling consistent profits out of the market. That's linked in the description below with the Bulletproof Your Trading Mindset 2.0 tool. So make sure you go ahead and you download both of those and you start using both of those to ensure that this year and heading into next year is your most successful trading year yet. If you have any questions, let me know in the description below. But if you find value in my videos, make sure you're commenting a supportive comment, you're clicking the like button, you're subscribing to the channel. And traders, before you click away, I want you to watch this next video. It's gonna pop up on your screen. It's a 15-minute video where I show you how to bulletproof your trading mindset, and I elaborate more on that Bulletproof Your Trading Mindset 2.0 tool.